Hi there, I'm Dean Heskin, President and CEO of Swiss America Trading Corporation. Thanks for tuning into our podcast, The Secret War on Cash, where we take an in-depth look at some of the changing dynamics or factors that are affecting us all financially and economically. There's been quite a few of them over the last couple of years. Today in particular, we're going to be talking about the most recent BRICS Summit, in addition to some of the financial actions that BRICS nations have been taking over the last several months. I have with me my co-host Chris, who's going to help us do this as well. So Chris, we're going to take a look at this most recent BRICS summit that just took place. And one of the interesting things that I noticed when I first started reading about what took place at the summit, et cetera, Putin and Xi Jinping were not there. And I think I'm pronouncing that. Maybe it's Tsai. I'm not sure, but nonetheless, China and Russia, their leaders weren't present, and that was
Yeah.
catching all the headlines. In fact, a lot of the media was many people were saying discussing the fact more so of who wasn't present versus who was. But suffice it to say, they're saying it was in terms of what BRICS is looking to achieve or accomplish, a very successful summit. And even though their leaders weren't there, the representation of all nations that are involved with BRICS were there. So tell us a little more about what happened in this summit, Chris, and
Yeah.
what do you think the ultimate outcomes are going to be?
Yeah. Well, they may just have wanted to avoid Brazil in July. I imagine it might be a little hot
Could be.
there, but they're largely their presence is symbolic, and they've been around a lot the last couple of years as BRICS has made headlines because they're wanting to get the news out there. And this summit was really more about okay, let's take what we've been talking about and let's put it into action. So yes, their representatives were there doing all the hard work as the
Right.
leaders maybe they were off playing in a better climate or tending to other issues for their nations, but
Well,
um,
and I don't want to interrupt you here, but I
yeah.
will. You're absolutely right because, and I made a note of this. They talked about what they're calling multilateral guarantees. So
Mhm.
they as nations decided to, like this is what we're going to do, and how the media was reporting on it is it was as practical implementation rather than diplomatic talk. So you're right. Like it's been discussions up until now, but this seems to be something like they're saying here. They're actually talking about what is practical implementation.
Yeah, exactly. How do we get this get the rubber to meet the road, if you will, and get the systems running. So they worked a lot on the BRICS currency, which they've mentioned is probably going to be some sort of electronic CBDC digital currency that they will put together, and a payment system to be able to quickly process transactions between member nations and move funds around. So it was very much operational plans that they're making here, and they're expecting it to be up and running in 2026. Maybe with delays 2027, but I mean that's right around the corner. So that was a big part of it. And they also, mentioned how de-dollarization has been accelerating. I mean, Russia and China are doing over 90% of their trade in the ruble and yuan in their own currencies. And they're also lending now. There's the New Development Bank, which is part of BRICS, is lended over 30 billion in local currency loans so far. So
Right.
so they're just moving things along and made good progress. Again, this wasn't one of the big, large, political summits in that sense, but this is where they are really getting the work done, and we'll see ultimately over the next year what comes out of this meeting.
Well, and the interesting thing about it is, like you just mentioned, as they're looking by 2026, which is just a few months away to,
Mhm.
launch this new currency. It's okay, well, that's coming, it's coming, it's coming. Yes, that is true, but they already are being very proactive in that, they have shifted. The petrodollar is not being utilized as much anymore
Mhm.
for oil purchases. They are getting rid of their de-dollarizationing their countries, their currencies, et cetera.
Mhm.
And so these steps have already begun. And like I said, this is they are now putting even further, more practical things in place. And that's where some people are saying, some of the analysts out there, and I would tend to agree with this, that the only thing that is keeping the US dollar afloat right now is that the amount of exports that or imports for us, but exports these other nations do, that they don't want to jeopardize that. But again, these changes are happening very rapidly, and it's hard to imagine that with these changes, even with those exports being a factor, that at some point it's not going to be a problem. So now looking at
Right.
the second article here, which again speaks to where these BRICS nations are, where their heads at, where their focus is. They're looking for safety as well in this de-dollarization. It's not just that they're saying, because we've talked about this, where some of these countries want nothing to do with the dollar. It's a kind of a power play, if you will. But
Mhm.
on top of that, there really are they have concerns about the safety and the security or the stability of their money, of their currency. And that's
Yeah.
where these BRICS nations are getting into crypto, they're getting into gold, they're getting into silver in order to try and find, some form of a hedge. Central banks getting out of dollars, been buying a ton of gold. So how much longer can this continue, Chris, before like something finally gives?
Yeah. Well, I think it's going to be a slow leak, because the U.S. dollar still does hold about 60% of the world's global reserves are held in U.S. dollars.
Right.
But BRICS at 40% or so control, 40 to 45%, that's still significant, but they need to bring more people on board. And I don't think that's going to happen overnight, but I do think it could happen in the next 5 years. And, to do that, to bring more people on board and get people to feel comfortable and adopt their currency, that's why they are purchasing all of this gold, silver, crypto, other safe haven assets that not only people but nations trust. We've talked about before how gold and silver has been around in a monetary aspect for thousands of years. And so they're going to continue to stockpile. That's part of what is pushing precious metal prices up, crypto prices as well. I'm sure those of you listening or watching this podcast have heard, Bitcoin in the news as well. Overtaking 100,000 plus per Bitcoin at this point in the market. And so that's going to continue. Our advice to the average investor is, while you yourself can't move those markets, you can certainly ride that wave. This isn't going to slow down or stop anytime soon. And I think people would be wise to at least take a portion of their portfolio and put it into these safe haven assets. Obviously, we deal here mostly with physical gold and silver, but for people that haven't dipped their toe in the water yet, I highly recommend they reach out, and whether it's from us or another company, quite honestly, just reach out and learn a little bit more. Knowledge is power, and many people out there still are not diversified out of your typical mutual fund, stock market type investment. So this really is a good opportunity for people to get on board and like I said, ride some of that wave.
Well, and to clarify too, Chris, and I know this is where your head's at, but as you talk about diversification and getting into gold, not talking gold ETFs, not talking gold mining shares, talking about actual physical gold and silver. That's what the central banks are buying. That's what BRICS
Yeah.
nations are buying. That's what financial institutions are buying. So you have an asset that is unencumbered. It's not a piece of paper. It's not an IOU for gold or silver. It is the actual item. And if you'd like to learn more about that, for those of you tuning in, you can contact our office. The information is free of charge. The conversation is free of charge. You can contact us by phone at 1-800-289-2646, or you can actually even text that number, 1-800-289-2646, and we'd be happy to help you out or get you whatever it is that you're looking for to get some questions answered and get maybe some better clarity as it relates to these markets. If you're not subscribed to this podcast, please do so. We'd love to keep in touch with you more in the future. Chris, thanks for sharing all that very good
Yep.
information. And I know there's going to be more of this to come in the future. So have a great rest of your day, great rest of your week for those of you tuned in, and you as well, Chris. And we'll talk to you real soon.
Thank you. Take care.